just to introduce myself, I'm Trudy. I'm one of our support staff here at CashCalc. This morning, we're going to have a quick look at account and security. We're going to have a good look at the fact find. I'm going to build a little bit of that live as well to show you how it's dynamic and hopefully quite easy to use. And then we're going to have a look at an example client. And like I said, I'm going to build some of it myself today. So as you can see, I am now logged in. We're going to have a quick look at that two-factor authentication, which is in my account at the very top of the screen. It's here on this first page. When you scroll down to the bottom, you've got your two-step login verification here. And when the box is ticked, you can enter in your mobile number and send a code and enable that. So of course, with COVID at the moment and lots of people still working from home like myself, it's more important than ever that we use these security facilities that we have. So let's jump straight in and have a look at this example client. We're going to go through the fact find first and touch on integrations before going into the cash flow model. So in true Blue Peter style, I have created most of a fact find first before coming in, but I am going to show you a little bit about it. So in this main page here, this is where you can pre-fill a form for your client yourself. You'd come over to more over on the right-hand side and click Create and Fill Fact Find. So I've already filled most of the information in here. The same personal details for Mrs. I have entered lots of information in already. In our address and dependents, though, I did want to show you this live. This is quite new, where we're working with the land reg. So if I then go into line 1, it's going to pre-fill the address for me. So I've also added in a dependent. This is important for when we come into the will section later on. If I go into my employment, the next section now, you'll see I've entered lots of information. Very importantly is the desired retirement age. That's the only mandatory field on this page, and the same for the partner. In incomes, this is quite new as well, where you can add in a gross value and we will then calculate the net. So I'm going to show you that one live as well. There you go. So we've estimated 4,000, which is perfect for this client. So I'm going to add that in. So you can see I've already entered information for the partner as well, or previous to this. With expenses, I have already filled some in, so you can see you can add individual items if you want to, but I've added in some bulk expenditure myself. For pensions, I've already added some in. They're really easy to do. So when you click on to add a pension, you've got who it belongs to, what type it is, the plan provider, the value, and the policy number. The same thing then goes for savings and investments. Now with other assets, because I've entered in that information for the main residence, when I add my asset now, this is their main property. It's joint, it's brought in the home for me, and it's also brought in the approximate current value as of today. So when I add in the cost it was bought for and add that, it actually shows how much it's grown per annum as well. So that's a new feature that we have as well. Loans and mortgages, they're also easy to enter in. So you've got joint, you've got your liability type, provider, how much it is remaining, how much they're paying, and when it's going to end, and any interest rates. Now for health and protection, you've got your normal information. I've added in some notes as well, just to show you how easy it can be to enter in information. Good for your compliance file and also for any suitability reports, because clients can also add their own information like you have here, but they can do it on their side as well. If we come down to protection policies, adding in a protection policy, easy as well. Really nice, simple form. So let's save and review. And what this page is telling us now is just any information that we've added, anything we've removed, and also anything that we have amended is going to tell me. So I've got new information on the right. We've got a new salary, we're adding it to the client profile, and we've got the home as well in the assets, we're adding it in. So all I need to do is save and go to onboarding. It's updated the form, so now in more, you can print your latest fact find. You can also view any of your older fact finds, lots of them that I've already done. And then when you request your updates from your client, that new information is going to be pre-populated in the form. What it's also done is automatically updated the client profile and integrations page. So this comes in really handy when you've got an integration set up. So you can use your sync with back office wizard over here, or as I'm about to do, you can import information into a calculator. So I'll click update calculator. This is all my information from in my form. You'll probably notice that the asset is automatically unticked. Any illiquid assets are not going to pull through to the cash flow unless you tell it to, and that's what we want. I don't want to pull a property through. So let's give it a name, current situation, and let's export the information, and it should take me straight through into the calculator so that I can get ready to just work on my case. So this is our main assumptions page. This is where we've got our overall inflation. You can change that at any time. You can overwrite it or use the slider. Likewise with end age, you can go all the way up to 110 if need be. And also just a note on that, if you've got clients with a large age gap, we always recommend putting the younger client first. We've got our events timeline here, but I'm going to come on to that just a little bit later on in a further cloned scenario, and I'll really show you how it works then. In our savings pots now, I'm just going to add in 1,000 into this pot and change the growth rate and update. Now, this current account at the top is very, very important. It's a system pot. We really, really need it with CashCalc, and it works the same way in here as it would in real life. So all the clients' wages are going to go in there. Any withdrawals they take from one of these savings pots is automatically going to go into this current account. And any expenditure, likewise, is going to come from this account here. At the end of the year, if there's any excess income, then that is just going to sit there by default. We've done that because that's how it would work in real life. But as we know, clients don't always give us the full picture of what they're spending, which is why you can cap that function. If you want to do that, it's up here in the right with options, advanced assumptions, and you can change it here. So you can cap it at a percentage or an amount, and the system will not save more than what you've told it is your cutoff for the client. Also, any contributions coming from the client, they're also going to come from this current account and go into the relevant pot that you've chosen to put money into. It's going to come from here if it's the client. If we have a deficit, it's also going to come from the current account. However, if that's empty, the system will move to the next pot in the list. So it's really, really important that we have these pots ordered in the way that we want them accessed if the system has to do it itself. So I'm just going to drag and drop my ISA to the top. And as you can see, it's re-ranked successfully for me. Okay, just to show you briefly how to add in a savings pot, it's the red button at the top. You'd enter your description of a pot, how much is in it, and then you choose linear or variable. With variable, we've got lots of different options there for you, but I'm going to come into that in a moment in a cloned version. If it's a pension, we tick the box, or any taxable type pot, and then you can enter in a default tax rate. This again is where the system is having to dip into a pot itself to cover a shortfall. It'll apply whatever tax rate you've entered here. So incomes and expenses next. We have our blue quick adds here. I am going to use them for state pension. I'm going to add both clients in turn. Now, these are not eligible for the full amount, so I am going to turn it into a custom one, and I'm going to change it to 16860. So that's one in. We also use the state pension age calculator behind the scenes, so it will come in at the correct time for the client. There we are. So we've got John's coming in at his age of 67. Josephine's is 67, but there's an age gap, so it's coming in when he is 70. Just to show you how incomes and expenses can be added, really, really simple. You type in your description, you put in your net amount. We do still work on net figures, but tax developments are coming, so watch this space. We will keep you updated close to the time. In our frequencies, we've got ad hocs, weekly, monthly, yearly, and also custom. I'll show you custom in just a second when I edit an entry. And also then for our start and end ages, any events from your timeline, they're at the top, but you can amend those ages as needed. Down here, you'll notice this one, changing their car. They want to change their car every 5 years, so I am going to use that custom one. So I'm going to click on edit on the right-hand side, and it is every 5 years between the age of 58 and 76. So I'll update my expense. Really quick and easy, and we've got our car in there now. Okay, in this section, we're going to add some withdrawals for both clients. We're going to add some tax-free cash, and we're going to utilize their tax-free allowances. So for this, I'm going to use our blue quick adds here. They do save you time, and they pre-fill information for you to tweak and suit your client. So I'm going to use some tax-free cash first using the PCLS. And I'm going to name in my description which one the tax-free cash belongs to, just to make it easier for the client with their end report. You can explain it a lot easier. As you can see, it has defaulted to a one-off 25%. It does this automatically, and it'll be at retirement age. That's the most likely way that a client will take it, and that's why we've put that in there. You could, however, have something like 5% for 5 years, or even a phased mixed drawdown. But in this case, it's perfect, so I am happy to add this in. It's got the right pot for Mr., and also we've got 0% for tax rate, so that's perfect. Now I need to do the same thing for Mrs. So I need to change my pot this time, make sure it's the right one, and add that withdrawal in. It's perfect. Now I'm going to do the first of my timelines for tax-free allowance. So I'm actually going to call it of tax-free allowance. I'm going to do the same thing with naming who it belongs to. Now he has the full allowance of 12,500. That is every year, and it's from now until his state pension age. So I'm going to use my event at the top of my timeline there. This is the correct pot already, so that's perfect. And then in withdrawal tax rate, because it's tax-free, I'm going to change it to custom tax rate, which defaults to 0 for me. I'm going to add that withdrawal in. I'm now going to do the same thing for her. I've cheated, I've copied and pasted to be efficient. So there's my title in. She actually has 11,000 every year. The reason being she's got that NHS DB pension that we touched on earlier. So hers is reduced. So hers is going from now until her state pension comes in. There we go. So I've linked to my timeline again. Choose the correct pot and change the tax rate and add that in. Fantastic. So now, of course, when their state pension comes in, they've got a reduced tax-free remainder because they've got the state pension. So now I need to do 2 separate timelines starting from state pension onwards, and then that's all our withdrawals done. So this one now for Mr. is going to be 3733, and that's every year. That is from his state pension, state pension, going to the end. That's the correct part. It's again tax-free, so I can add my yearly withdrawal. Same thing now for Mrs. There we go. And she has 2250. Don't forget, she's still got that DB pension coming in. So here's going to go from her state pension age until the end. We choose the correct part, change the tax rate, and add that in. And there we have it. Very, very quickly, we've built in all 6 of our entries for withdrawals, 3 each. We've got tax-free allowance before state pension for both, tax-free cash for both, and then tax-free allowance post-state pension for both as well. For charges and fees then, I'm just going to add in some simple fees for their funds. Call them overall fees. Mr. It is 2%. That is going to be annual. That is from his pension. Same thing now for the other 2. %. That's annual as well. That's to end. That one's also 100. Last one then for the ISA. This is 2% as well for that one. That is annual. That's going to 100. And that is from the ISA. So that is my full cash flow model built. Okay. So if we look at money in versus money out, if you ever need to change a start date, it's in the options top right. You can edit your forecast details, 3rd one down, and I'm just changing the date. So that's 4th of the 5th. That's when we would have seen them. There we go. Okay, so with our money in versus money out, this hopefully will look quite familiar to you. We've got all our different incomes in their different colours. As you hover over any one of them, you'll be able to see a breakdown for them. The pale green here is deficit covered by savings. And then we've also got our expenditures. So they are the black solid line. If you ever have a second line, it may be dashed, it could be red or grey. That will be any contributions that the client is making to their savings pots. So that will be above the black expenditure line. Savings over time then. This is the health of our different savings pots. Cash type pots are in green shades and pensions are in blue shades. The red then at the right hand side, that's where they haven't got any savings left, but they're still having to meet their essential expenditure and therefore they're drawing up an overdraft. So now I'm going to clone my situation. And what I'm going to do now is show post advice. And I'm going to look at linear growth. And I'm going to choose my current situation and click create. So now I've got an exact replica here of our first situation. Now all I'm going to do in here is actually just change the charges and fees. So we've looked at transferring the pots out to a new provider. They've got lower charges, and I'm going to amend them now. This is going to take possibly about a minute to change all of the fees, but then that's one whole forecast done really quickly. Right, so we've got fund, I call it fund fees. This is 0.22. That's every year, and update. So I'm just going to do the fund ones first, then platform and advice. And then the same one for this one. This is fund. And now if I do the platform charges, that's Mr. And that is 0.25. That's going to be annual all the way to end. That's pension, add. Do the same thing for the other two now. That's a percentage, that's every year, going to 100. It's the ISA, and last one for these types of fees. Also 0.25, that is annual again, to 100. Perfect. So now just the advice. So advisor fees ongoing. It's going to be a percentage, 0.5 per annum to 100. That's going against Mr's pot. And then last one, initial advice fee. That is 3,000. It's a one-off, it's now, and that's also from his pension. So I've made all those changes. It hasn't taken very long, but now what we've got is a strong increase in the health of their savings. We can also compare in the top right, compare forecasts, and you can see immediately the difference. It didn't take me very long to change those whatsoever. The first forecast is always going to take the longest amount of time. If you get this one spot on, put all your effort into that one, making it perfect, then these clones are going to be really, really quick. So now I'm going to show you the difference between actually investing this money. So post advice, new investment. I'm going to clone it from my post advice. And now in this one, the only change I'm going to make is actually against their investment strategy. So if I click edit, I want my variable. I'm going to put them into cautious because that suits their risk. Really, really quick. And also if you want to preview any of the ones that we've got, you can, so you can see the volatility. What you can also do is create your own. So as you can see, we've got lots on here on my own account. They're really, really quick and easy to do, and I'll show you that at the very, very end. So update, and voila, in just 30 seconds, I've got my brand new forecast. This is them with their lower fees, but also they've got their volatility, they've got their investment and risk strategy, they've got the dips and troughs of the market, and they're ready to go. Much, much, much improved. So the next thing that I want to do, only 2 more forecasts, everyone. The last thing I want to do really before stress testing is having a look at long-term care. This was incredibly important for the clients, so we want to see if they can afford that. So this one is long-term care. I'm going to clone from our new investment strategy and create. So this is where our events timeline comes in, which I did promise to show you. So I'm going to drop that down at 78. This is long-term care. It is for John, it's for Mr. and it is at 78. But if I wanted to change anything in these, I could. I click save. That's now in my timeline. So now I can add in something to link to it. So I'm going to add an expense. This is long-term care costs. It's 4,000. That is every month. And now I can link it to my events timeline right at the top. I put that through to 100 and add my monthly expense in. When we come down to our cash flow model now, you can see the impact of that on their savings over time. It has reduced their financial health. However, it's looking pretty good for them. We're managing this for a long time. That's a long time to be in long-term care, but they're doing pretty well. Just to show you, if I then change my events timeline, if I move that to 80 instead of 78, what we'll see then in the incomes and expenditures is that our long-term care has automatically moved to 80 for me. I haven't had to go in and edit it, and it's updated my graph as well, and we're back here. So now I'm going to stress test it. So this is our last clone, everyone. So let's apply a market event to it as well. This is our last forecast. I'm taking long-term care and clicking create. As you can see, all these cloned versions, they're so quick to do. It's that first one that you really need to put all your energy into, and then these ones are so lovely and easy to build in. So we've come straight down to stress testing. It's simulate market event. You can choose any one of these that we've built in for you, and like with the variable growth, you can build your own as we have. So I'm going to bring in the COVID drop, and I'm going to put it in at age 65 in this case. I'm going to affect all our savings pots except for current account, run the simulation. It's coming over here. So when you hover over it, you can see that big drop there. That is our COVID drop. If I'd made a mistake, I would click reset. I'd change anything I need to, and I'd run my simulation again. But I'm happy, so I'm going to apply my changes. And when you go back into your cash flow model and savings over time, as you hover over, you'll see all your normal growth rates. Till the first year of a market event, it tells you what one you've applied, tells you the growth or minus growth. And then as soon as your event ends, you resume your original growth rate again. So you can see big impact on the client there. Stress testing is incredibly useful, very important, and it is just about being really reasonable, but it's a very powerful, clever tool, and definitely worth having a good look at and building your own in if you want to. The other thing that we have, just to quickly show you on stress testing tab, is the meter goal feature. This is quite new, it's brilliant. You've got 3 different types of targets or goals that you can look at. It could be not running out of money, hitting a savings pot amount target for one savings pot, or looking at a total combined savings across all investments. Then we have 3 different types of methods as well. So you can adjust the growth, or contribute to pots, or look at expenditure. With the top 2, growth and capital, they will actually produce a brand new forecast for you. It takes all the legwork out for you. It calculates it and produces a new forecast. The third one, of course, it will calculate how much they could increase or decrease their expenditure by. But of course, that's a conversation for you to have with the client. So it won't produce a new graph, but it will give you a really good idea of how much they need to increase or reduce their costs by. Just a quick look at the yearly breakdown and the reports. So this is where I like to come. If I'm a little bit lost and I can't work something out, or if I want to look at something in more detail, this is where I come. This is my lifesaver. The reason I say that is because you can break down any of these years. Just click on one that you want to see more detail on, and it gives you a full breakdown. Particularly things like charges, as you can see, they're all broken down into their individual figures, but also any taxable amounts, they're going to come in here. You'll either see it in this column here for withdrawals, or on the right here in this empty column here, you might see a gross figure there where it's a deficit being covered by a savings pot. So really quick look now at reports. So if you aren't already branded, you can brand all of your reports completely free of charge. So there won't be any mention of CashCalc anywhere. That's easy to do as well. With report options, if you wanted to have a breakdown like I've got here, make sure you've opened up your specific year in your yearly breakdown first, and then in this section, click breakdown of selected years only. These two are fab if you have variable growth or if you've got stress testing applied. They'll give you a chart of the volatility and also a table detailing every pot the client has with growth rates per annum for the whole forecast. Any negative years will be highlighted in red. So those two are very, very nice if your client has either variable growth or stress testing. And you can also include your events and timeline as well. So let's have a look at a PDF version. So what we do is give the client a brief overview of what we're doing in the report. It's for the end client. We list the ones that we've included, and then we jump straight in. None of this will be unfamiliar information. We've got our assumptions at the start. We give them full details about their savings pots, including real return. Then we look at any withdrawals they're taking, charges and fees. It's all laid out. Incomes in green, expenditures in red. Money in, invest, money out. Savings over time. I have an additional graph. If any of you want the third graph, let me know. I can tell you where it is. But that's the two. That's your cash flow in the foreground, and your savings over time in the background. And then you go into your yearly breakdown. That's my broken down year. There we go. And then it follows the exact same format then for any others that you've included in your report. So up in my account, this way you're going to find lots of really helpful information for your account. Branding is the second tab down there, so you can upload your image at any time. It has to be 200 by 200 pixels minimum, but we accept any format. Integrations, if you want to set those up, they're here as well. And if you need any help with integrations, please just get in touch with us. We'll be more than happy to help you. And then templates, they're down here on the left. So as you see, lots and lots and lots of templates in here on my CashCalc account, but you add a variable growth template at the top. Enter in your template name, minimum of 2 years. You could have lots and lots of years. So if I say 24, it's a lot of years, but you simply type in those figures in here and it builds your graph on the right. When you then add your template in, it's available at all times for any client. Same concept then for market events. You add it in the same way. And also we do have asset allocation templates you can build as well. These are also great and can be exported into the Cashflow model to use as well. So if we click on view/edit against one that's already been built, you can export as a variable growth template in the top right once you've built your asset allocation template in. So it's not just for the Monte Carlo. like I said earlier, with integrations, if you ever get stuck, give us a call. However, if you're stuck with anything on CashCalc, please give us a call or an email. Don't suffer in silence. We're here to help. So on our home screen, we've got our telephone number and also our email address as well. We've got a lovely team here. We're available 9 to 5, Monday to Friday. So please do just get in contact with us if you need anything at all or have any questions.